Rolly, thank you so much for the introduction, guys. It is a great pleasure to be here. I just want to check if everyone can hear me okay. So give me some yeses in the chat box, some Ys if my sound is coming through loud and clear. So Jana's there. Excellent. Bunch of yeses coming through. Brilliant. Okay, so um, we're going to have hopefully a great presentation that's going to give you lots of ideas that you can take away, apply to your own trading, adapt with the market, and evolve and really generate some great profits for yourself. So getting started, I'm going to talk a little bit about us and what we do and who we are. Let me just check my pen's working, and it is. So we're a trader research team. I have a few guys that work with me. We have a great office space with around 20 monitors up on the wall. We keep in touch with the markets and what is happening at any given point in time. Our team is primarily focused on one, trading, and two, developing research tools that can be used by ourselves, primarily by ourselves, and then providing those research tools to professional traders based in the UK and across the world. So we primarily work with professionals in hedge funds, trading firms, prop firms, and this type of thing. And it's just a great pleasure to be here with you guys to share some of the ideas that we have. So um, as we get started, this is the big question for the room today. So this is a big question that I want everyone to focus on, and please type in your answers in the text chat to let me know what you think. So the question is, what influences a stock's price? What do you think influences a stock's price at any given point in time? So if you could type into the text chat to let me know what you think influences a stock's price, and we'll get things running. So that's the big question that we're answering today. So Near's in with the big guys: psychology, sentiment, people, emotions, supply and demand. Supply and demand, yeah, absolutely. Emotions, trade emotions, future profits. HFTs, Leroy, good one. Demand, investor sentiment, greed and fair perception. Raymond, that is actually a very, very good answer there. Perception. Volume, big traders. Oh, bunch of answers coming through. Perceived profit expectations, absolutely. So pretty much every answer there was a right answer. But the way I like to break down what influences a stock's price, there's two main dimensions for me. So everything that you guys have described will fit into those two main dimensions. One is the quantifiable information, and quantifiable information is basically taking into account the things that are already known about the stock. Right, this is information that's regularly released, including the stock's fundamentals, the industry that that stock is in, earnings, outlook, all these types of things. The unquantifiable side of things is the sentiment and general feeling around the stock. So this is where greed and fear and these types of things come in that are not quite quantifiable, but they do have an influence and affect the way that people view a stock and the likelihood of either purchasing or selling that stock. And ultimately, what these two parameters lead to is the market's perception, right? And I think someone mentioned perception. I think it was Raymond mentioned perception. Perception is the key thing. That's what influences how much a stock is worth. Fundamentals, all of these things are great. They're very, very important. But how that stock is viewed is the key thing. And ultimately, perception is what equals price. So the perception or the view that the marketplace has of a stock is what equals price. Does that make sense, guys? Give me some yeses to let me know that you're with me so far. It's a fairly straightforward idea. So your goal as a trader, everyone in this room, everyone that's here today, our goal as a trader is to look for and react to information that's going to cause a shift in this perception. So everything you're doing, all the decisions that you're making, all the indicators and everything that you look at, essentially what you're trying to do is look for information that's going to help you analyze and ascertain what is going to shift the perception of this stock or this market. What is going to cause a shift and a change? A shift in perception is ultimately going to result in a change in supply and demand. right? It's a simple connection. If the viewpoint that you have of a market or of a stock changes and shifts, ultimately that viewpoint and that change in that viewpoint is going to be reflected in supply and demand and thus result in a change in price. It's that simple, and that is exactly how the market works. Um, and that's the key to understanding the inner workings of the markets. So, guys, this is another question to the room. So, get your typing fingers at the ready. What information creates this shift in perception? So, what information that you can look at, what specific pieces of information that you can pay attention to will create this shift in perception? This is a little more difficult question, but hopefully there's some guys out there with some answers. And Gersh is straight in there with analyst rating changes. Absolutely. Yep, that's a good one. So examples like that. What can result in a shift in the perception of a stock? What pieces of information that can be put out there can result in a shift? So Michael's in with it. Announcements, earnings, news releases, analyst ratings, absolutely. Fundamentals, new products, yeah, absolutely. Excitement around that. News, press releases, takeover bids, macro events, absolutely. And especially these days with what's going on with the Grexit and all, everything in Greece, there is a lot of macro influence that's happening right now. How much of it is overblown, I don't know, but there is a lot of information to pay attention to. Insider buying and selling, absolutely. So all of these, the answers that you guys have given, they are what I call influencers. They have an effect on how the market will perceive and view a certain stock. And the key thing is to pay attention to the right influences. So what we're going to do in this presentation today is break down the key influencing factors that you need to pay attention to. And Norman's come in there with these all caps upgrades and downgrades. Absolutely, Norman. So the, the key thing we're going to focus on today is what pieces of information are the most likely to cause a shift in perception of the stock and ultimately a change in its price, right? Sound good? That's exactly what we're going to focus on. That's what we're going to break down. So what we're going to start with what a few of you guys mentioned, which is breaking macro news. Breaking macro news is essentially what we will see on TV, on Bloomberg, and all these major scheduled events. It's the big economic releases, it's the GDP figures, it's the retail sales, all of these types of things. They have a massive influencing factor on the market as a whole and individual stocks also. But important speeches given by big market influencers, Janet Yellen speeches and uh, Mario Draghi, all of these guys, the opinions that they have on the market will ultimately result in fundamental shifts. Statements regarding major global economic powers. So, if a country is getting its debt downgraded or upgraded, you're going to see a shift in the perception that people have on the stock market of that country, on the currency, on all these types of things. And absolutely the last one, which is statements that are influencing interest rate perceptions. So, when you have Janet Yellen talking about the latest FOMC decision and the statement regarding that, that is going to have a view, that is going to have an effect on how traders view that market, how traders view the stock market, how traders view currencies, how traders view crude oil, and all of these types of things. So breaking macro news is incredibly important and has a massive influencing factor on stock and market perception. Uh, Next on our hit list, and we have a big focus on technical analysis and the research that we do, but in terms of analysis of the stocks, we focus on a few key areas. Now, the first is to identify major support and resistance areas, and that's a key one, and we have a great methodology that we employ on that side of things, but also we're paying attention to the other simple metrics that a lot of traders pay attention to. So stocks hitting 52-week highs and lows. This is a very simple metric and it's very easy to measure, and it oftentimes when stocks are hitting these major highs, major peaks and troughs that need to be paid attention to, a lot of traders will pile in at that point because it's giving you lots of exuberance around a particular stock if it's making these brand new highs and brand new lows on the 52-week scale, and again on the overall scale. So if a stock is hitting new highs and new lows, that is something to pay attention to, because what you'll see at these new highs and lows is an increase in emotion. You'll see an increase in greed. You'll see an increase in fear as traders pile in on this particular stock based upon that information. What we also pay attention to are patterns, key patterns that affect the market. All the well-known major patterns that a lot of traders pay attention to. The key thing is to plug into the ideas that a lot of traders hold there and try to take advantage of them. Try and take advantage of those ideas to to the end that you wish to trade. Okay, so next on our list, going back to breaking news, is breaking news that specifically affect that particular stock. So what we're talking about here are deals within that stock. If it's signed a deal to supply parts to, say, Apple or another company, mergers between that company and another major company, bankruptcies, rumors, and rumors are quite interesting because oftentimes rumors are a contrarian idea where you're buying the rumor and you're selling the fact. But all of this type of thing has an influence. If these rumors are circulating around all the major desks, it can really have an impact on how the market views that particular stock. And the other thing is news that just hasn't been priced in, news that is completely brand new or has been leaked. We live in a world of the Twitter sphere where pretty much any company employee can leak information about their company or about a particular stock at any given time with a wide reach at zero cost. So, we live in that age where information can be shared exponentially at the speed of light. So definitely that can have a great influence. And industry news, news about an industry as a whole, if there's a plane crash or this type of thing, it can have a great influence on, all the other aircraft stocks that are out there. So definitely these types of things have a great influencing factor. Okay, so continuing on with the breaking news, these are kind of the more nuanced breaking news pieces. TV mentioned. The key thing with breaking information is, one, that information has got to have an influence, and two, the spreading of that information needs to be wide. It needs to be widespread. And there's nothing, well, there's not a lot more widespread than being on CNBC or Bloomberg in real time, sharing an idea with hundreds, if not hundreds of thousands of traders, investors in real time. So the actual idea might not be very powerful, but because it has such a massive reach, it can have a great influence. So TV mentions, we're talking about all the crazies here, the Kramers of the world. They can have a great influencing factor. They can affect whether they're right or whether they're wrong. They can affect the perception of the stock, especially in the short term. The sentiment, how traders, investors view stock, that interlinks with the TV mention side of things. The the idea that people are a lot more knowledgeable than you, the presenters are a lot more knowledgeable than you, and sharing these ideas with you has a great influence. Rumors, of course, we've just mentioned this earlier on, and the key thing about news is that it has the effect of shifting the perception or view of a stock and its price in a very, very short amount of time, because news can dramatically shift and shape the way a particular stock is viewed, the paradigm through which traders are viewing that stock. It can change incredibly rapidly, and there's many examples of that in the marketplace. Okay, so this is another one that someone else mentioned as well. I think it was Norman. Upgrades and downgrades. Now, what upgrades and downgrades do is provide, much like the TV mentions, they provide an insight into what professional investors are thinking and feeling about a particular stock. Now, traders on the whole and people in general, they like to follow people with authority, and this authority, it can have a massive impact on the short-term movements of a stock. especially when you have influential analysts, the Goldman Sachs, the Bank of Americas of the world, Credit Suisse, and quite a few of the smaller firms also. If they have a credible analyst on their team, a lot of people will pay attention to that analyst and what they're saying, and these kind of views will come out relatively consistently, and they can have a great influencing factor on how that market and that stock is viewed. So we're gonna continue rattling through these guys, and the big focus will be on questions at the end. Um, earnings. Earnings are essentially the profit that a company makes, and analysts will base their future value of a company on earnings projections. So when earnings come out, the projections are made, and the earnings and then the projections influence in a very short amount of time how and why that stock is viewed, and the movement that it's likely to have. Earnings season is just very simply based upon how analysts, people outside the company, view that particular stock, their expectations of how well that stock should be doing versus the actual. And it's as arbitrary as that. It's literally that relationship that you're seeing when you see movements in earnings. And if a company surprises, we'll see a move to the up or downside. Okay, insider transactions, this is not as cool as it sounds. We're not talking about the film Wall Street or anything like that. But one of the key things to pay attention to is the people who are inside a company, the C-level directors. We're talking about the CFOs, the CEOs. How are they viewing their company? Because these guys are on the inside. They know what's going on with the company. They know how well they are doing. Are they purchasing more stock? Are they rewarding themselves with more stock of that company because they know that the future looks bright for our company? Are they selling their stock? And this indication of insider confidence or lack thereof in a business can have a great influencing factor on on the stock itself. Because of course, if the people within who are inside the company think everything is great and are buying buying the stock by the truckload, that is going to filter out and affect the perception that other traders have. It can be used to con the market sometimes, but on the whole, when you're seeing people pony up their own money or be granted stock options in some way, shape, or form, you're seeing confidence within a company as to how well the company is doing. Another thing that we pay attention to that is quite interesting, and I'm sure many of you guys in the room today have come across this or in some way, shape, or form, is search anomalies. And we're talking about something just as simple as analyzing search data from Google. There's a Google Trend site that you can pay attention to and analyze and look at what stocks are being affected and how the market is viewed overall. But we've noticed some really interesting things with regards to this data. And what you'll see is a real, you know, almost touchable form of fear and greed, and you'll be able to see what's happening, and how people are feeling. So what I found is that as a stock is rising and going up in price, the overall searches for that particular stock seem to decrease and slow down. And it's, to me, that's a telling sign of greed. When people are doing well and they're holding onto their stock, they don't tend to panic. They're quite relaxed. They don't overly search for what's happening with AAPL right now or anything like that. So you'll see a general downswing in search information. But when things start going badly for a stock, and see a general downtrend, search volume seems to dramatically increase, and fear seems to be an incredible force, in driving people to frantically search for what's going on with my stock. So when fear kicks in as stock price is going down, you'll see search data increase. Does that make sense, guys? Give me some yeses if you're with me on the search side of things. I know it's a relatively straightforward concept, but I just want to make sure everyone's with me so far. Yeah, just give me some yes in the chat. Brilliant. So this yes, excellent. Everyone's with me. So fear results in increased search behavior, and greed results in reduced search behavior. And it's these relationships that we pay attention to because it gives you a view of how market participants are viewing a particular stock or a particular commodity. And it provides a great insight and indication as to how traders view that particular stock. Okay, so this is where things start getting interesting, and now we're heading into the big focuses. The big focuses at unusual activity, what we really spend a lot of time on as a big attention grabber. And JD just made an interesting point. It would seem that the search data, I'm assuming you're talking about, that is after the fact news. Absolutely, it is. But it's interesting information, and it's showing you an overall trend in terms of how people are viewing that particular stock. It's just that piece of information, especially sometimes in a 1 day period, you might see a spike around a particular stock, but for no particular reason. It does provide an interesting insight as to what's going on. So moving on to order flow anomalies, these are the big focuses on what we do at unusual activity. Order flow anomalies are a big deal to us. Unusual options activity is a big deal to us. So we're talking here about block trades, large block purchases. These are block trades are usually an indication of institutional trading. These trades are generally done over the phone, and traders are reporting them electronically after the fact. And it can be either a large block trade, or if this trade is going through electronically, usually that trade will be broken down into a lot of smaller prints. So what we pay attention to are the large bids and asks, and also over a certain time frame, an unusual number of prints or an unusual number of trades, which gives you an indication of larger traders, of institutionals, of the whales basically moving the market. So this is a big focus of what we do. Order flow anomalies are a key thing to pay attention to. This unusual options trades is probably the biggest focus that we have as a platform. It's a key indicator in terms of stock information and what's happening and the perception around the stock. But very simply, what we're paying attention to is large and unusual trades and block trades. We're looking for large puts being bought, large calls being bought. Much like the order flow anomalies, these are large trades, and we're also looking for sweeps. Now, sweeps of calls and puts are basically quite a few smaller trades around the same amount of time. So just the same as what we were discussing earlier with the order flow anomalies. But it's essentially equivalent to a lump sum transaction. So you're looking for large trades, large options trades, and you're looking for a large number of smaller transactions around a similar amount of time. It's very simple. The concept behind it is incredibly simple. Are you with me on that, guys? It's just looking for these big trades and for a lot of smaller trades over a shorter time frame, especially in thinly traded securities as well. So guys, why is unusual options activity important? Why is it a key thing to pay attention to? What it does is give you an indication of a larger players in the security. Players on the whole do not want to be noticed in the underlying stock, so they'll use the options to quickly accumulate rights to that stock and to be able to take the trade that they want to take. And what it also does is serve as a looking glass into the upside or downside potential of a particular stock. Okay, Mohammed, can you hear me okay? So I just saw someone mention that sound is lost. Okay, good. So it serves as a looking glass into the upside or downside potential of security. And again, it's similar to the insider transactions from CEOs and CFOs. It's giving you the viewpoint of professionals, of people that have large amounts of money and know what they are doing and that have key information about a particular stock. And oftentimes it serves as a precursor to major events, news, earnings, product releases, all of these types of things. You'll often see unusual options activity around these. So a lot of these influencing factors that we're talking about will have with them some other major event that is kind of corroborating what's going on. This is a biggie for me. Intermarket correlations and the relationships of markets with each other is a key area that every trader needs to pay attention to. So what we look at, how stocks correlate with industry sectors, other stocks, commodities, currencies. If you're seeing a spike in oil, what stocks is that likely to be affecting? If you're seeing, the euro tank, what particular stocks will that be affecting? These correlations are incredibly important. They're created and unwound all the time, but on the whole, you're going to see, a lot of interrelationship between different markets and different stocks. So it's a key thing to pay attention to. So news information that affects a stock sector is also likely to affect those stocks that are correlated to that instrument. So that's the key thing to pay attention to, is the relationships between these different sectors to each other, these different markets to each other. So this is another thing that's kind of come of age over the last few years or so, and that is social media. Social media is one of these tools that's often talked about, and how traders can utilize it to understand sentiment and how traders are viewing the market and the overall viewpoint people have. But we've found generally quite simple ways to use social media. And the first one is an obvious one, and that is breaking news. Social media, Twitter or stock twits, offers you a platform, pretty much anyone, a platform to be able to share information very, very quickly with a wide range of people, the entire world basically. So it's a great place to find breaking news from insiders and what's happening in the market. Also, what we pay attention to is Twitter and stock twits activity spikes around certain stocks. So when a stock experiences a significant increase in activity, just like you see with search data, it's often a great time to pay attention to that particular stock with regards to the discussions that have taken place around it. We also pay attention to average activity. So how much is this stock being discussed on average? And if you see like a general incline or an increase in these discussions, it's worth paying attention to. There is something going on within that stock that is resulting in overall confidence around that particular instrument. Another big area to pay attention to is high frequency trading. This has been a really big buzz phrase for the last few years or so, and oftentimes been a major point of contention. But we've found a relatively straightforward way to pay attention to this information. Essentially, high frequency trading is the automated trading algorithms that are using very powerful computers. And it's really impossible to keep up with what an individual algo trade is doing in a centralized marketplace. But what we're trying to do is work out overall positioning of buy and sell robots from the tape. So what is the overall positioning of these different groups of HFT users and the tape? How is that position taking place, and how is it likely to affect the underlying stocks that they are trading and placing their positions on? So guys, we've gone through a ton of market influences. We've gone through a ton of powerful indicators that affect the market and how it's viewed. What we pay attention to, just to summarize, is breaking news, technical analysis, upgrades, downgrades, earnings, insider transactions, search anomalies, order flow anomalies, unusual options activities, correlations, and social media. These are all these are all pieces of information that can have an influence on a stock and affect the way that the market views that particular stock. And this is a lot of information to look at. But what we've found is that all of this information has something in common. So all of these types of news, the social media, the unusual options activity, the search data, whatever we discussed, whatever we talked about, it all has one thing in common, and that one thing is volume. Volume is the key thing to pay attention to. It is the ultimate indicator. It is the ultimate tool. And ultimately, all price action of a stock will first appear in order flow and volume, right? So no matter what the influencer, be it technical, be it macro, be it some breaking piece of news, whatever it might be, all all of this information will be condensed down to a singular measure, which is volume, which is traders purchasing that stock, the order flow, purchasing that stock, selling that stock. That is where everything comes down to and what it boils down to in a singular measure. So spikes in volume will always relate to one or more of the influencing factors that we've described. And we pay attention to a volume in a few different ways. But the key thing, the most important thing that we pay attention to at Unusual Activity um, is much like any of the other news services out there. We look at all of these influences. We look at all the major news that's coming out. The Bloombergs and the Reuters of the world. We do a similar thing. We share that news information. But what we do that's different is we combine all of that information together and focus on volume. Is that information resulting in an increase in volume in that particular stock? That's the key thing. And this is the key thing that we focus on. We focus on volume spikes, real time volume in that stock. So it's combining all of the information that we discussed earlier, all of the different influences, all the different indicators, and connecting them to volume. Does that make sense, guys? Give me some yeses if you're with me so far, that pretty much every influencing factor that you see in the marketplace, be it upgrades or downgrades, all of these types of things, they will ultimately result in a change in volume. That is what you're going to see. It's order flow. It's a change in volume and how the market perceives a particular stock. Brilliant. Lots of yeses coming through. Excellent. So the key thing is influencer information, everything that we've discussed today, plus volume information, volume confirmation results in market moves. That's the key thing. That's the key thing to pay attention to. And what we've developed, and guys, if there's any questions about this, please feel free to ask away right now. What we've developed at Unusual Activity is a trade ideas platform. So we pay attention to all of these influencing factors that we've just discussed and gone through, and we pay attention to them in real time as to how they're likely to affect all the thousands of stocks that are out there. And we're a platform that helps to generate trade ideas for traders. This is just a quick view of the platform itself. It's incredibly straightforward and simple. And what you'll see is a steady stream of news, of information that's likely to influence and affect stocks, right? It's just like any of the other news services out there, but the key thing is we focus on volume. So the big red, when you see something in red or green, you're seeing basically either sell side volume or you're seeing buy side volume based upon that particular piece of news information, right? Based upon that particular influencing factor. So be that HFTs or upgrades and downgrades, all of these types of things. That's essentially what we do. And we're currently in a semi-beta phase, and when we fully release our service to the public, it'll be $99 a month. But we wanted to offer a great early adopters special offer for everyone that's here today. And I'm just going to rattle through the details of that offer for everyone. So we're going to give you a class recording on the information sources that we've talked about and how to trade them. We're also going to be giving you 3 months of access to our Unusual Activity data feed, our news feed, which is worth $297. We're going to give you recordings of past classes that we've done on unusual options, how to trade that information, which is worth $150. We're also going to provide you with an insight into insider transactions. and some really cool ideas that you can employ with that type of information. SEC filings, we have a class on that also, and trading news events. So there's some great classes there that are part of what we do. The total package that we're offering is worth just over $1,000, and it's essentially a subscription service. We're offering a 77% discount on that $99 a month, so you can get the service itself for $97 per quarter. So for 3 months of access, you can get, sorry, for 3 months of access per quarter for $97. That's less than $32 a month. You will have access to our Trade Ideas platform, and what I'll do a quick screen share as well, so you can see, the news and information that we picked out today and how that affected the market. The URL you need is unusualactivity.net/adapt, and of course, we've got a 30-day money-back guarantee to ensure that everyone is getting something that they are interested in, that is going to help them adapt and evolve with the market. So guys, if there's any questions, feel free to type them in, and I'll be happy to answer any questions that you have about the platform itself. The service that we're providing is incredibly straightforward. I'm going to try and do a quick screen share to see if I can share the platform with you today. Stop sharing. It's asking me to install something, so I don't think we're going to be able to do that today. But I can give you a quick view of this is basically what the platform will look like. It's essentially a view of the marketplace itself, the major news that's affecting the market, how that news is influencing the market, unusual options activity, trades, all this type of thing, how they're likely to affect the market in real time. So that's some really powerful stuff that we're putting out there for traders. Dan, does that rate continue after the third month? Absolutely. So this is for the life of your subscription. It is literally, you've got this special offer because you're an early adopter. You've joined us at the right time. You will have this price for the life of your subscription. There's no risk at all. So you've got 30 days to try it out, see if it's for you, apply it to your own trading, adapt, overcome, and you should hopefully see some great results with it. Dan's also asking, is it possible to filter for particular stocks? Right now, we don't offer a filtration mechanism because what we're trying to do is create a platform in which we do the filtering for you and give you the best possible information. So our team will do that work and put that information together and share it with you. I hope that answers that question. But we do have some plans to add some level of filtering in the future. I don't have any examples in the slide set, but like I said, it's a 30-day money-back guarantee. There is no risk. You can see in real time if this information works, if what we're providing is good, if it gives you an edge. That's the key thing. There is absolutely no risk to anyone here today, and of course, you're getting a great offer price as well. You're getting a great offer price as well. The big focus, Mohammed, is on stocks. So we do talk about commodities. We do share information on crude, on gold, if there's something significant taking place in those markets. But it is within the context of stocks. That's the key thing. Reggie, yeah, this is primarily focused on stocks. Primarily focused on stocks. We do have plans to expand the range of the service that we offer, but it is primarily focused on stock trading. Don's asking what platforms does this work on? Don, it's a web-based application, so it'll work on anything. It will work on Internet Explorer, on Chrome, whatever. So it's not platform dependent in any way, shape, or form. It's basically a news service, a trade ideas service. So you'll see a general stream of ideas and things to pay attention to and areas to look at in the marketplace. That's the key thing. Hi Dan, what about the fact that most trades take place in dark pools? We do have access to some of that information as well. So we basically try and put out anything that is likely to give our traders an edge. You know, we have a network of traders that we work with and are able to gather some great information in real time, especially what's affecting the marketplace. Hi, JC. Seven most powerful indicators. Yeah, that's what the presentation was focused on in terms of, you know, the key pieces of information that you need to pay attention to in trading stocks. Most definitely. So you can get the offer today at unusualactivity.net/adapt. It's a great discount for everyone that's here today for 97 bucks a quarter. So that's 3 months, every 3 months, $97, which is an incredibly great price. Our service is primarily focused around unusual options activity, you know, major pieces of news that are affecting the stock and the markets, and all of the information that's likely to have the greatest influencing factor on how stocks move overall. Hi Reggie. Also penny stocks. We do look at some smaller stocks, but generally speaking, it's going to be, you know, mid to larger range stocks. That's kind of been more of our focus than anything else. But yeah, absolutely. I mean, we try and focus, you know, the information that we share on stocks that are most likely to move if there's a powerful enough piece of information on that stock. I hope that answers your question. So guys, definitely do sign up for the free, and I can see a bunch of you already have, which is great to see. You've got a 30-day money back guarantee, so there's absolutely no risk whatsoever. Unusualactivity.net/adapt. You can sign up today. If there's any questions, feel free to send us an email. You can find that information on the website itself, and we look forward to hearing more from you. If there's any further questions, feel free to send us an email.